Let's talk about one of the most frustrating things in trading. You get stopped out of a great trade, and then, boom, the market snaps right back without you. Well, today, we're going to break down a strategy that flips that exact frustration into your biggest advantage. Let's dive right in.
So, picture this. You've done your homework, right? You found a solid trend, you're in a good position, and you're feeling pretty confident. Then, completely out of the blue, the market just lunges against you with this sharp, sudden move, and just like that, you're stopped out. What on earth just happened?
Your stop loss gets hit, you're kicked out of the trade, and then almost instantly, the price reverses and just carries on with the original trend, leaving you in the dust. I mean, it feels totally unfair, like the market is personally playing games with you. But what if I told you that move wasn't random at all?
Yeah, that infuriating gap, it's not just market noise. More often than not, it's a calculated move. It's a bluff, and it's specifically designed to shake people like you out of your position. The real question is, what if you could learn to read that bluff and actually use it to your advantage?
Well, there's a name for this. It's called a liquidity grab. See, the big institutions, they have a pretty good idea of where retail traders, people like us, place their stop loss orders. So they use that knowledge. They engineer these sharp moves to trigger all those stops, which creates this big surge of buying or selling that lets them fill their own gigantic orders at a much better price.
So, okay, how in the world do you tell the difference between a real reversal and one of these bluffs? It's actually pretty clear when you know what to look for. A genuine reversal, that's on the left, it's usually got strong follow-through, maybe some new fundamental info backing it up. But a bluff, over on the right, it's just a quick, violent move with no real reason behind it, and the price just snaps back almost immediately. This chart here shows you exactly what to look for.
So the whole philosophy here is actually really simple. Instead of getting mad about it, we get strategic. We don't try to fight the shakeout. No way. We expect it, we wait for it to happen, we look for that confirmation that it was just a bluff, and then we hop back on board the original powerful trend.
All right, so how do we actually put this philosophy into practice? Well, that's where the gap reversal system, or GRS for short, comes into play. This is a specific, rules-based way to trade these exact scenarios.
The GRS is designed to do one thing, and do it really, really well. Identify these institutional stop hunts and give us a crystal clear entry signal to get back into that primary trend, right after the big players have made their move. So, you ready to put this thing into action? The best part is, you don't need any super fancy or expensive indicators. The GRS uses standard tools, just in a very specific way. Let's open up the toolkit. The whole system is built on just 4 key things: modified Bollinger Bands, a 9-period EMA, the 30-minute time frame, and you want to make sure you're trading high liquidity instruments. Let's break down each one so you know exactly what we're talking about.
First up, the Bollinger Bands. Now this is crucial. We turn off the middle line. We don't care about the average price here. All we care about are those outer bands, which act like these dynamic envelopes for volatility. That bluff move is designed to push the price right to the edge of this envelope, and that's exactly where we're going to look for it to run out of steam and reject.
Next up is our 9-period EMA. Think of this as our gravity line, or our trend filter. It's simple. If the price is consistently hanging out above the 9 EMA, our intraday trend is up. If it's below, the trend is down. This little line keeps us honest about the true direction of the market's momentum.
Now, having the right tools is only half the story. You have to use the right settings. The 30-minute chart is really the sweet spot for this strategy. It gives you a clear picture of the trend without all the crazy noise you get on lower time frames. And please, stick to major indices and large cap stocks. It'll save you a ton of headaches that come with low liquidity and messy charts. Okay, so we've got the problem, we've got the solution, and we've got the tools. But what's the secret sauce here? What actually makes the GRS work so consistently? Let's get into the logic behind the whole system.
So the edge here, the whole reason this works, it all comes down to 3 fundamental market truths. 1, trends, especially strong ones, tend to keep going. 2, traders are predictable. We cluster our stop losses in obvious places. And 3, big institutions actively hunt for these clusters to get liquidity. The GRS simply aligns our trades with this reality. When you really boil it all down, the entire trade logic is just 3 simple steps. That's it. First, we spot a gap that looks kind of fake against a clear trend. Second, we wait for that gap to push all the way to the opposite Bollinger Band and then fail. We need to see that rejection. And third, we enter, betting that the original trend is about to kick back in. That's the whole play. All right, now for the million-dollar question. Is the GRS actually the right fit for you? Let's do a quick check to see who this system is really built for.
The GRS is an absolutely fantastic fit for traders who love having clear rules and structure. It's perfect for intraday traders, but it can also be a really powerful tool for swing traders who want to add an extra strategy to their arsenal. The main thing is you have to be okay with the volatility that comes with trading these sharp moves, and you should already have a solid handle on the basics like trends and candlesticks.
And just to be super clear, this is probably not the system for you if you're an absolute beginner still learning the ropes. It's also not a great fit for traders who rely purely on intuition or trading by feel. The GRS is mechanical, and it takes discipline to follow the rules, especially when the market feels totally chaotic.
So, the next time you see one of those sharp gaps against a strong trend that makes your stomach drop, just take a breath. Instead of seeing it as some unfair, random move, ask yourself, is this a real reversal, or is the market just showing me its cards? Because now, you have the tools to spot the bluff.